Well, back home on Dalal Street, the benchmarks continue their up move. They were held by a handful of large caps. The mid caps, though, yesterday sulked in trade. The Nifty managed to end above the 10,700 odd mark, led by Reliance as well as IT stocks. The big cue, though, this morning is that the Fed has indicated a softish stance in comparison to what they've been talking about in terms of interest rate hikes. And we have all those Asian markets that have opened up well in the green. Ekta is with us. Morning, Ekta. Indian bulls will be very, very happy to wake up this morning. Crude lower, SGX is Nifty up 100 points. It's expiry day as well.
Well, yes, you hit the nail on the head, Nigel, in terms of all the important cues that we'll be working with today. It is November expiry, and we've already rallied a really handsome bit when it comes to the November expiry. We've gained over 5% in this series as well. The Nifty's rallied around 600 odd points, and we seem to be in a firmer place when it comes to what we've seen in terms of cues. You know, Brent crude has softened. We have month to date, we've outperformed in terms of the MSCI. So all of those things seem to be in place for us when it comes to a rally. And for today, it's all about the US, the US, the US and the Fed. The Fed and what exactly Powell said when he signaled that rates are near neutral, which spiked a rally in the Dow, which was to the tune of around 600 points, the biggest rally that we've in fact seen in 8 months. And that's obviously slipped over and percolated down to the Asian markets. That's going to be the key cue to watch out for today. Generally, in such a case, you'd also see maybe Brent crude rise, but Brent crude is currently sub $60 per barrel. So we have that cue which is favoring us as well. Remember that the FIIs seem to have come back to our market as well. For example, in the November series, in the month of November, the November series, you can call it, they have bought around in 18 sessions, they bought 13 sessions. So that kind of FII confidence seems to be coming back to the markets, and it seems as though we are currently better placed when it comes to the macros as well. We have the rupee which appreciated on a day-on-day basis, and with such cues, we're probably going to see that kind of momentum continue for our markets. Obviously, the 200 bastion to watch out for the Nifty, and if we surpass that, then obviously it's going to be a very, very healthy expiry, and let's hope for that. One of maybe the best series we'd probably see this year. So that's how exactly we're set up this morning. SGX is obviously indicating that it's going to be a very firm start for us.
Okay, so let's see how this particular series ends, because as of now we have gained over 600 points, and for starters SGX Nifty is suggesting a bump up of over 100 points. But Ekta, you set up the overall macro picture for us in terms of the positives like crude, dollar, rupee, etc. What are the stocks that you're watching out for, and how are they expected to react today?
Well, I don't know how much of a stock-specific day it's going to be today because, you know, there are stocks such as Yes Bank, DHFL, all of these stocks which have declined. So how they do in a trade, in a setup today would be important to watch out for. Remember that Yes Bank month lows, so that would be important to watch out for. Separately, in terms of a couple of stocks in focus, IL&FS Engineering says SEBI has not acceded to allow the company to extend time to submit financial results. BPCL, long-term foreign currency issuer, is rated at BBB. And also separately on IL&FS, they've initiated steps for monetization of renewable energy assets. TCS has made an acquisition, so do that. There's management changes which has taken place at Jindal Lease Finance. Separately, sources tell CNBC TV18 that Unilever may pip Nestle in the race for GSK Consumer Health. Remember that GSK owns Horlicks as well as the Boost brands. HAL CMD, talking to CNBC TV18, did mention, gave some guidance with regards to FY19. SpiceJet says the company as per stipulated timelines. So that's important to note. ICRA has downgraded Yes Bank's Basel II compliant lower tier 2 bonds from AA plus to AA. So do watch out for that. And their long-term ratings on Yes Bank watch with negative implications. Remember that there was the GDP data which was revised as well for the previous series. So do watch out for that. Not really any sort of implication on the market, considering that it is backdated information. So that would be something to watch out for.
Okay, all right, Ekta. Thanks so much for that. Well, on that note, let's come in from Pankaj Tibrewal of Kotak Mutual Fund on the sectors he likes.
NBFCs, if you look at our portfolios across the board, we have been underweight this space for a very long period of time. And clearly our holdings are the players who are leaders in their own segments. We believe that every NBFC has to recalibrate their business model going forward. At least for next few quarters, most of the NBFCs are not thinking of growth but preserving liquidity. We believe they are in a very sweet spot because the NPL cycle somewhere is stabilizing, may not be towards the end, but it's stabilizing. And second, you would see the slowdown of NBFC market share for most of the private corporate lenders. And in some of the private corporate lenders in the large cap, we have seen the leadership changes, and there's a clear visibility for next 4 to 5 years in terms of leadership. We have been trimming exposure to consumption names, mostly the staples and a bit of consumer discretionary. If you remember a couple of years back, a lot of our top holdings in mid-cap used to be the white good names, the consumer discretionary names. Over the last few months, we are seeing that the margin of safety there is lower on count of overvaluations. On cement, I think we are very positive from a 2 to 3 year perspective. If you look at the last 5 years, and the supply which came into the cement sector was more than the demand. In the last 12 to 15 months, the demand has surprised everybody, and that clearly shows that the real economy is in good shape.